Hi, if you're getting this video from me, this means that we're about to start on the loan, but we're not processing, and I have not pulled your credit just so yet, and I need to explain why. Instead, right now we're looking over your monthly debt. We're going to see if you co-sign for anybody, if you authorize or other authorized signers on each other's account, a lot of information that we are not too sure of. Probably liens that we didn't even know. So there's a reason why I'm not pulling your credit first to see. Some people tell me it's easier, it's faster, and sometimes easier and faster doesn't mean that it's going to be beneficial to you. It could be beneficial to me, but remember, once individual like myself, a lender or a bank pulls your credit, not only that the time clock starts, it put a dent into your credit by having an inquiry. Your score, it could drop if I do not close you within the next 30 or 45 days. And since we have a lot of things to go over, why don't we just do it right? Do it secure, right, and every point counts. Why does FICO score count so much? It determines the program we can have. It determines the interest rate. It depends on getting us a full approval, how much funds to close. So we wanted to make minimal risk to the bank as much as possible, or to the lender. All right, so some of the collection agency actually buy out a system, some kind of a software or some kind of a program to inform them when you are about to buy or to rent property or even open a checking account. And it's all done by pulling your credit. Once we pull your credit, it will trigger. It will trigger that report. Then they will report to the collection agency. The collection agency will then report a new collection. Haven't you ever wondered how is it that they know this just happened when you just pulled a credit, an old collection popped up, they sold it to someone else new, making an old collection into a new collection, making that time that they have to report or remove from the report. Some say 2 years, 4 years, 7 years they're supposed to drop, but didn't say that they can't sell it. They can sell that debt to somewhere else and it starts all over in that reporting. But they're very smart these days. So whether you're at fault, not at fault, why you paid or not paying the collection, that's a totally different world that we can chit chat about another video on that. But in this case, they will report the collection agency to your credit again. Then it makes your score drops drastically. So I prevent by doing all this by understanding this first. You and I be on the same page so that we can work this out together as fast as possible, quickly as possible, and cost efficient. Yes, you can hire some professional. You can hire some credit repair company. You pay them a monthly fee. You can pay an administration or initiative fees and things like that. 6 to 8 months. Right now, we're just seeing how much it is before we even get to that part if it's too much of it. To protect yourself from getting triggered, you can opt out. Look for my other video about opting out. It's called Opt Out Prescreen, and you can opt out through optoutprescreen.com. Okay, so that's done on that part. Now, to view your credit report, the best way is go through the government. It's called the Federal Trade Commission. You can go to ftc.gov. They are the one who protects American consumers from all these creditors. You can go in there, get your free credit report, and they can get you all that report. That's the first step. Or you can obtain and getting a free credit report as well with no FICO score, and both of them does not have score in it for you. But the annualcreditreport.com, they allow you to pull your credit every single 12 months for free. It tells you from all the 3 bureaus of TransUnion, Equifax, and Experian. You do not do all 3 at the same time unless you're buying a property and you want to know all 3 of them. Then that's a given, right? However, if you're just trying to protect yourself, then just do the first 12 months and stagger. Let's say you're doing TransUnion the first 3 or 4 months. Then the next 3 or 4 months, and do Equifax. And the next 3 or 4 months, do the Experian. So at least you have it staggered a little bit. You don't utilize all 3 bureaus at the same time, because most vendors, collectors, credit card company do report to all 3 bureaus. Usually those who do not are automobile loans. Some department store, they only report one of the three or two of the three. And that's kind of understandable. Not all department stores is located everywhere. So like Bloomingdale's, they're not located in Texas. So they report onto their region of their bureaus. Okay, they do not provide you the FICO score. This is only good for you to just see your debt. And if you have any dispute, you can, start doing that. If you think that you pay down the credit or inactive account and you need to make it active, I did not say reapply a new one. There's a difference. Or the dispute, I didn't say pay for the collection. There's a big difference between that, okay? So you can, once you have all that, you can have the report. You can print it out immediately online. Remember to print it before you go to the next screen. I did that once in helping out someone, and I couldn't back. And so when I couldn't back screen each of them, we had to go ahead and do a request by mail, and that takes longer, up to 30 days. And you don't want to do that, right? So I just want to make sure, emphasize again, there's a difference between a dispute and settling for an old collection account or paying for it. So your score does not increase by settling old accounts. The dispute means something's not right and it's not mine. It belongs to my ex. I'm not on the account. He did not pay for it. I was an authorized user, and then now you're reporting that account collection onto my name. That's what you can do a dispute. That's one example. Then that account totally removes from your credit, and they have 30 days to do so. If they cannot provide or prove that you are responsible for that account, of course, that is being removed. Because it's being removed, your score also increases. However, if you are doing a settling payment, a partial payment plan and all that, that does not say that your score will go up. The collection is still there, but you now agreed to pay them. So why is it some of my lenders are telling me I need to pay for some of these old collections account? Because you could not dispute it, it was not removed, and most of the lenders' guidelines have a limit of amount of collection you can have. It's usually about $2,000. There's a difference between FHA and conventional for residential loans. If you're doing business loan, totally different ball game, and look for my video on that one separately. So usually it's $2,000, and that means that, let's say you have a collection up to $1,999, then you're okay. You don't have to pay that. You're good to go. If you're at $2,200, then you have to pay it down below $2,000. However, that goes to all collection except for medical collections. Medical collections not factored to be part of that $2,000. So let me know what else interests you, and if this information is only good up to fall 2018, because as you know, guidelines and details may change every single time. I hope this was useful for you. Let me know if there's anything else I can help with or to answer. You can always message me. You have all of my contact information.